Hey there, awesome accounting student. Mark Franke here. This video is for Accounting 100, Chapter 4. With this, we're going to look at the General Journal and the General Ledger. General Journal is what we call the Book of Original Entry. You could call it the Bible of the business. So the journal is where we record transactions that happen in the business in chronological order. I've always thought that the journal was named the journal because the first accountant, Luca Pacioli, was a man. If Luca Pacioli had been a woman, invented this, it would be called the General Diary. I don't know, but that just seems... But anyway, like a diary, it is literally a chronological sequence of things that happen in a business. And it's a permanent record. So when we make entries into the journal, we should put any information that we have about the transaction so that it will be permanently recorded. And that could include the vendor name or the customer name or a phone number or a name of a person, anything. So even though we're going to be recording debits and credits, there's oftentimes more information that we need to have in the journal that, again, memorializes or documents what happened in the business so that down the road somebody can look in the journal and say, this is what happened. I've often put a VIN number. If we bought a truck, if a company bought a truck, I put the VIN number in the journal. Then they have the VIN number and we know this is the exact truck that we bought on this day. So I'm going to use problem 4.2b as an example on how the journal works. This is on page 117. So what we're going to do is we're going to record these transactions in the journal, and then I'll show you how they get posted into the general ledger. Okay, so let's start with the journal. And the first transaction says, Chan Lee invested $20,000 cash in the business. This is the this is the Lee Photographic Studio. And Chan Lee is the owner. So we're going to start with a heading. This is the Lee Photographic Studio. And we generally don't put a date in the heading for the journal. So I'm not gonna worry about that. But each transaction does need a date. And the first date for this is June the 1st. We're gonna use 2019. I'm gonna call this transaction A. And I don't need to put in the account number now. We will do that later, but we know that cash is going up, $20,000. That's a debit. Assets go up with a debit. And Chan Lee Capital is the credit, $20,000. And we're going to say the owner, actually to record the owner capitalizing the business or something like that. Just a brief description. We don't have any calculations. We don't have any other information but this. So we will leave it at that. Now, I always like to skip a line just to put some white space in, and then we can record the next transaction. But notice a couple of things here. Number one, the debit account comes first. Debits always come first. Then the credit or credits. So if we had more than one debit, we would put all the debits down and then whatever credits we had. In this case, we have 1 debit, 1 credit, which is going to be true, at least in this class, with most of the transactions. So debits are always first. When we do the credit, we want to indent it about 1/2 inch so that the debits are flush and then the credits will be indented. And then for the description, we might want to indent another 1/2 inch and record the transaction. Again, if we had a calculation, we would put it in here. If we had any other information, we would put it in. All right, so transaction B or 2 is on June the 2nd. And it says, issued check 1001 for $2,000 to pay the June rent. Okay, so we're going to debit rent expense for $2,000, and we're going to credit cash. Cash is going down. Cash is an asset. Assets go down with a credit. So we, in effect, wrote a check to the landlord to pay the rent for our photographic studio, and this is to record payment of the rent on check number 101. We don't know the name of the landlord, or we could put it in here. But we can put in any information that we know about. And then let's do one more. This is transaction C, purchased desks and other office furniture for $9,500 from Office Supply Inc., receiving invoice 5312, payable in 60 days. There we have a lot of information, so we're going to put this all in here. This was on the 5th of June. But let's get it right. It's 2019. This is transaction C. And in this case, we have some office equipment. That's a debit. We bought equipment. Equipment is going up. And we're going to pay later. So we have a liability. This is going to go into accounts payable. We didn't pay cash for this equipment. We just told them we would pay them in 60 days. So this is to record purchase of office equipment from Office Supply Inc. That's the name of the vendor. On invoice 5312 due in 60 days. I put all the information from this transaction into the journal so that down the road somebody can see it and know exactly what happened. And if they want to look at the invoice is going to be filed in the accounts payable files, so they can go find 5312, see exactly what office equipment was purchased. Again, put any information that you have into the journal. Okay, so that shows you how to make journal entries. Let's look at how we can post these. You'll notice I did not put the account number in here because I'm going to post it to the general ledger. And so I've given you in these work papers a partial general ledger. And I've only got 3 accounts. I'm not going to post everything to these general ledger accounts, but I just want to show you how this works. So let's take the first transaction. The first transaction is a debit to cash. Let's go back to the journal, a debit to cash and a credit to capital. So I'm going to come over here, and in the date, I will put the date, 6/1/2019. And what I'm going to do is actually, we probably wouldn't even have a description but we'll just put capital Oh no, what we'll do is label the reference, the letter that I attached to it, okay? And this is in journal page 1, so we'll put J1 in there. And the transaction is a debit to cash of $20,000, and because this is a brand new company, the transaction also is a balance of $20,000. In other words, we've deposited $20,000 into the bank, and so now the balance is $20,000. Then we'll go down to the capital account, and this would be a separate page in the general ledger. Again, transaction A on J1, and this is a credit to the capital account, and now the capital account has a balance of $20,000. Then I'm going to go back to the journal and I'm going to put in the account number. Cash is 101. This is right in your textbook. And capital is 301. So we always have in our chart of accounts our 5 types of accounts: assets, liabilities, equity, revenue, and expense. That's from chapter 3. Assets are 1s, liabilities are 2s, equity is 3, revenue is 4, and expenses are 5s. That's the way this works. This works very, very universally all throughout the world. Assets are 1, liabilities are 2, equity is 3, revenue 4, and expenses are 5s. And if you look at the chart of accounts on page 117, you'll see they're following this exact same convention. So let's post the second one. The second one was the rent payment. I'm going to go back to my general ledger, and this was on June the 2nd. Transaction B, and this is still journal page 1, J1, and I'm going to debit the rent expense $2,000 and the balance is $2,000. And then the credit is going to the cash account. This was on June the 2nd. Sorry, I had a plane going over. $2,000 is the credit to cash, and now the balance is going to drop down to $18,000. Okay, so if I continue on and make these journal entries, I've got to go back and post the rent expense is account 514 and the cash account is 101. So this is a way that I know that I have posted these things to the general ledger. So we have what's called a cross-reference. We know where it is in the ledger, we know where it is from the journal, and we know where it is from the journal when we get to the ledger on page 1. And you can imagine if we were a big company, we had pages and pages of the journal, then it would tell somebody looking in the general ledger, this is where it is on the page. Now, the general ledger is a very old school concept. The general ledger nowadays is on a computer. It's either going to be in a software like QuickBooks or many, many other different types of software that accountants use, or it could be in Excel. But most companies have accounting software that records this stuff in a journal and then posts it into the ledger. So I don't want you to spend a lot of time worrying about the ledger. We're going to use T accounts. T accounts work just fine. In effect, the T accounts are a substitute for the general ledger. So I've set up some T accounts for you. They're in the worksheets that I published, and I'm going to go and post these to this general ledger. Again, this is a substitute for the real general ledger, and it just works easier and better. And frankly, for virtually everything in this class for the rest of the semester, if it says general ledger, you can use T accounts. Now, you can't do that in Connect because Connect is preset up and I don't have any control over that. But for what you turn in to me, you can always use T accounts as a substitute for the general ledger. Okay. Second transaction was the rent. So we had a credit to cash of $2,000 and a debit to rent expense. And then my third transaction was the office equipment, $9,500. This is transaction C, and a credit to accounts payable. Okay, I'm going to stop the video and I'm going to record all these transactions and post them to the T accounts and then prepare a trial balance. So if you want, you could pause the video and make these journal entries and then post them to T accounts and prepare a trial balance. But I'm going to do that as well, and I'll be back and then I'll show you what it looks like. Okay, I'm back. And here we are. I'm going to go through these quickly. We bought some photographic equipment for cash. Debit photographic equipment, credit cash. We bought some supplies. This is transaction E. Debit supplies, credit cash, $550. We paid for some office cleaning expense. $800, debit office cleaning expense, credit cash. We performed some services. Some we got paid for immediately, some we're going to get paid for in the future. Debit accounts receivable, $2,600, debit cash, $2,600, and credit fees income, $5,200. We returned some supplies. So we bought the supplies before. Now we're returning them. We're going to debit cash. Cash is going up. They gave us cash back for the damaged supplies. And then we'll credit supplies, which is going to make supplies go down. That's a kind of an odd transaction. Then we have some office equipment we bought. Debit office equipment, $2,250. We paid $500 in cash. We paid, and we're going to pay $1,750 later. Transaction J, we we made a payment to office supply on account. So accounts payable is going down. It's a liability. That's a debit. Cash is going down. That's a credit, $2,500. There are no new transactions in Chapter 4. These are the same transactions that you did in the T accounts in Chapter 3, but now we're just formalizing them into our journal. Transaction K, we performed some services. Anytime you hear perform services, it means revenue, and our revenue account is fees income. Debit accounts receivable, $2,500, and credit fees income, $2,500. We paid the phone bill, transaction L, $632, debit telephone expense, credit cash. Transaction M, we got some money from our customers on account. These are credit customers. We didn't do any more services. We just got paid for stuff we'd already done. Debit cash, $2,300. Credit accounts receivable, $2,300. We paid the utility bill. Anytime you hear the word paid, it means cash is going down. That's going to be a credit to cash. Debit utilities expense, $750, and credit cash, $750. And then the last transaction, this is transaction O. We record, we paid our salaries on a number of checks, 9, 10, and 11. Debit salary expense, $65.50, and credit cash, $65.50. So when I post these transactions to the T accounts, so here is what the T accounts will look like after I've posted them and I've prepared, I've calculated the balance in each account. I've highlighted them in yellow so you can see the balances. And even though this problem didn't ask for it, I'm going to make sure that my balance, my debits equal credits, so I prepared a trial balance. And the trial balance will look like this. And when I add up all the debits and all the credits, $36,450 is the ending balance in all the accounts, and my balances all balance. In other words, debits equal credits. Now I wanted to also show you, I posted everything just to the general ledger cash account. So I've got that. Notice that $86.98 is the balance in the cash account. That is on the trial balance. If I look at my T accounts, the ending balance in cash is $86.98. And so I know that's the balance. So here is the general ledger for the cash account. If you remember, we put the first two in, and in this case I actually did put descriptions in here. Either way, you can reference it to the journal and put a brief description, but the point is we keep a running balance of the cash account, and my ending balance is $86.98. It agrees with the T account, it agrees with the trial balance. This is what the cash account general ledger would look like. Okay, that's it for this video. Thanks for listening, and I'll see you again next time. Practice, practice, practice. Bye-bye.